Thank you, Subit. And thank you very much, Vicky, for having put together this meeting. This is the fourth year in a row that I've been coming to the bank fund meetings. And I do hope this year the environment is going to be a lot more positive because by all indications, there is a more positive mood around the world as far as the economy is concerned. Last 3 years had been extremely difficult years. And obviously, as an economy which is globally integrated, if the world economy moves on, consequential impact on demand, consequential impact on Indian economy also would follow. And I do see that as one amongst the various reasons why in the coming months and years, Indian economy also probably destined to move up. I'll take off from where Secretary Mr. Subhash Garg just concluded. As far as the opportunities in India are concerned, I think they've been becoming extremely wide. The first factor in an opportunity is, do we allow people to come in? And obviously, as a country which has realized the virtues of more investment into the country, we have systematically liberalized our policy over the years and probably one of the more liberal open economies today in the world. And not only have we liberalized and opened up and allowed people to enter, we've made the procedures of entry also very simple. But then it's also a harsh reality that merely because you have a door wide open, that's not enough for people to enter. When they enter, they must feel more comfortable. And they may feel that India is an extremely comfortable place to do business in. And I think in this regard, there are 3 or 4 factors in India which now stand out. And in that sense, it's a different India. The first is, irrespective of the federal character of India and the multi-party character of India, there is now a feeling both amongst the center and different state governments, and this almost is without an exception, but each one wants an investment to come to his or her state. And therefore, each one, therefore, is bent upon creating an environment which is more friendly. They want the time lag between the decision to invest and the actual investment taking effect on the ground to be cut short itself. And therefore, I think the participation of the states in India in wanting large investments to come to their states is one fact which augurs quite well for an opportunity in India. The second, of course, we've cut short a lot of our procedures. Most permissions which were earlier required are no longer required. And wherever required, I think they are quite expeditious. Environmental permissions are the ones which come to the center. And there is also a continuing introspection in India as to which are the ones where time is taken and that operates against us. And as the ease of doing business rankings year after year have indicated, land building is one area where we need to improve. And a lot of state governments are now, since it's a regional subject, putting their house in order to make sure that how those procedures itself can be cut short. The other factor is that governmental discretions now have substantially ended. And this has brought down, if not eliminated in many cases, the stigma of corruption which once struck to India itself. And I think people have realized that India, in most parts, is becoming a far cleaner place to do businesses, and that itself adds to the opportunities of doing business in India. And then come the factors with regard to the availability of a great human resource in India, a very large market in India, and the ability of India to reform. Now, there are some reforms which are low-hanging fruits, which are quite obvious for any government of the day to really target and achieve them. They are achievable by some executive actions or some policy push required in those areas. But there are some which are extremely challenging and difficult. And I think the attempt to formalize the economy, to integrate the informal with the formal, to assault the shadow economy in the country, and then take all consequential steps, one after the other, all aimed in one direction, to expand India into a far cleaner, bigger and better economy. I think this was one of the objects of a series of reforms which culminated in the demonetisation itself. The IBC has changed the whole dynamics of the creditor-debtor relationship. If demonetisation eventually is going to lay down a new agenda of how India spends its money, I think the IBC has now changed the relationship between a debtor and a creditor to the extent that that indefinite chase which the creditors had of chasing the debtor and chasing them indefinitely without success probably comes to an end. And therefore, the very idea that a defaulting debtor could on day one be out of his company, and then that non-performing asset in the hands of somebody else would become a more performing asset. It's taking time for people to even adjust to the very idea that this could happen in India. But I think this was inevitable. And the other impact of this is going to be that borrowers are going to have to indulge in far more ethical and correct business practices. Because the consequences of pushing your companies into debt for reasons other than market conditions, I think is something which any borrower will now try and avoid. And of course, the taxation laws which we are changing both on the direct side and the indirect side involves a practice where we are using technology in a big way on the direct taxation. I had already announced that the corporate tax rate would gradually come down from the small and medium scales we've started. There is a scope for moving up always in that direction. And the GST experience has shown that governments at the center and the states are willing for a big plunge. And I think one of the greatest success of GST, I feel, is that every state government without an exception now has realized that it acts in its favor. So even when political parties indulged in some pinpricking over GST, the governments that they controlled were not willing to toe that line because they knew that that's where the benefit to their regional or state interest lay. And that's probably one of the reasons why forging consensus, coming to decisions expeditiously, reacting to changed or emerging conditions in the market, and then taking appropriate actions itself was possible. And as we continue with these sets of reforms, I think there is a huge amount of opportunity, as the Secretary mentioned, in the IBC assets, the stressed assets which are now going to be increasingly becoming available. There's a huge amount of opportunity in the infrastructure sector because the kind of activity which is going on and which is planned down, if you look down the tunnel and see what's planned as far as the Indian Railways is concerned, the seaports are concerned, the new regional airports are concerned, the highways program goes on. I think there's a huge amount of opportunity as far as India is concerned. And I think it's an opportunity. I've been interacting last 3 days, both in New York and Boston, with the investing community itself. And it's quite comforting for us to find that investors view India as a country where they see a lot of activity. And as one of the investors put it to me, that when we think in terms of making long-term investments into India in 2017, we have to keep in mind where India would be in 2040 and 2050. And that's where our investments really will produce their own results. With these few words, I'll leave it for any further interaction in the course of this meeting, if possible. Thank you.
Jonathan Ward, Atlas Organization and University of Oxford. Thank you, Minister, for your remarks. I wanted to ask you about the concept of Mission 500, of bringing U.S.-India trade up to $500 billion from $100 billion now. Do you think that that is still a useful organizing concept in the U.S.-India relationship overall? Should we be emphasizing this more?
Well, I think these missions really outline and re-emphasize the object of the relationship. The relationship between India and US over the last few years has evolved into a very strong partnership. And I think it's a relationship where you have both the US companies doing a lot of business in India, and vice versa. A lot of Indian companies now feel comforted making investments in the US and are continuing. And it's an exercise which requires to be taken forward. And in fact, I had a meeting today both with the Treasury and the Commerce Secretary. And one of the suggestions which was mooted in a meeting with the Commerce Secretary was that we must actually get back with a governmental participation, private sector conferences. Now, first in a different concept is taking place in November, where you have a lot of US businesses traveling to India for a very large conference, both with the government and India's private sector, and probably repeat this exercise next year in the US itself. And I think there'll be a great opportunity for, of course, there is an opportunity for Indian businesses here, but India, for instance, the aviation sector is expanding. And I do see over the next decade or so a huge expansion in the aviation sector taking place. And US companies are but a natural investor in that particular sector itself. We've taken a huge initiative in the defense sector. And we want these companies in partnership with Indian companies to set up manufacturing facilities in India itself. And if you see the kind of both the door opening, as I said, and the opportunities in those sectors itself, I think what you mentioned as figures in the mission are not a distant dream by any chance.
Yes, please, Commissioner.
Hello, sir. Alyssa Ayers from the Council on Foreign Relations. Can you speak a little bit about what might be upcoming on land or labor reform? These have been challenging politically.
You see, as far as these areas are concerned, immediately there doesn't seem to be any problem to the reform process being created by them. Land, for instance, we've allowed all the state governments to make whatever changes they want in the land acquisition laws. And in any case, most state governments, at least for foreseeable future, have large chunks of government land lying with them. So if industries are to set up, etc., there is a lot of governmental land available. But if for some infrastructure project some more land is required, then there are for government bodies certain exemptions from certain provisions even under the 2013 law which do exist. And if over and above that a state government wants to make its own amendments, the centre has always said that we'll permit you to do them, and it requires our approval being a concurrent list matter. And therefore some states have even taken the initiative in that matter itself. Labour problem in India is a little overstated, in the sense that I don't think today we've had reforms in various sectors where labour unions, I think the age of strikes is long over in India. These are more associations, and they want to protect their service conditions, but they've not been a hurdle of any substantial nature in several areas. For instance, when we reformed in the banking system, when we've reformed in the aviation sector, you had very powerful unions there, but the reforms have gone on notwithstanding them. Currently, we are making some changes, and there's a group of ministers which I head, which is coming out with the new labour code. And 2 of those codes we finalized. It's going to be about 4 or 5 volumes. And 2 volumes we finalized. One has already been introduced for parliamentary approval. The other is now coming up before the cabinet itself.
Shanzil, Deutsche Bank. Thank you, Mr. Minister, for your remarks. I wanted to ask about the budget for financial year 2018. How much revenue slippage are you expecting? And should we be
revenue slippage?
And should we be worrying about breaching the deficit target? Should we be expecting
you see,
more borrowing in Q1? Thank you.
I'll tell you a broad approach of the government has been very clear in the last over 3.5 years. And we've been broadly sticking to our fiscal deficit targets. And we realize the merits of trying to stick to that. Now, as far as the direct tax is concerned, the figures have just been released for the first half year, and we are almost on target. The GST, of course, these are early days, and because it's a transition phase, it's too early to discover a pattern. But probably another 2 to 3 months where the existing stocks will be exhausted. And what is manufactured under the new GST era, only that production will come, so the trend will now become a little more visible. But as I said, our priorities do include fiscal prudence at a very high level.
Thank you very much. That was very helpful. Rachel Ziemba, Rubini Global Economics. You mentioned in the remarks about the insolvency and a variety of other regulations. I was wondering if you could give us a few signposts to watch for on the issue of non-performing loans in the banking system, and if also, just to follow on the last question, I know there's quite a lot of political debate about stimulus and next pathways on the fiscal side. You've just mentioned fiscal prudence. What should investors be watching for in terms of either expenditure switching or other things like that? Basically, what should we be looking for in this environment as the economy recovers?
You see, as far as banking is concerned, you can take it from me that the problem of the non-performing assets we are trying to address on a very high priority. Now, this is really two aspects. One is to recover what is now recoverable. And that's a procedure for which we've amended laws, we've created new laws, we've created a new machinery, and that machinery will probably take care of it. As far as the public sector banks is concerned, they are one important part of the banking system itself. And I think we need to strengthen those banks so that their ability to lend in India is maintained. And that issue is at a very high priority level under the consideration as far as the government is concerned. Your second question was with regard to what you referred to as the debate on stimulus. Now, there is no debate that we started on stimulus. I recollect somebody asking me a question as to, in one quarter, relatively the growth had slightly slowed down. And I said, we are conscious of the challenge and we'll respond appropriately. So that was translated by my friends in the media as a stimulus. And that's how the debate went on. But I can only tell you that when you undertake structural reforms of this kind, there can obviously be a short-term impact for one quarter, for 2 quarters or so. But these transient impacts should not be construed as any form of a long-term challenge, because I do see the long-term impact, the medium and the long-term impact of all these changes is certainly going to be very positive.
Thank you. Adrian Mutton from Sanam S4. We look after the local interests in India of about 300 international organizations representing about $5 billion worth of investment into India. We look after a large portfolio of the world's leading universities who are active in India, delivering projects in research, in partnership activity, and increasingly developing IP in the country. The Higher Education Foreign Providers Bill has long been talked about and has been parked for quite some time. But we see tremendous appetite from the universities that we deal with in getting more involved in helping develop entrepreneurship programs, IP creation, and fostering the environments that have been very successful, particularly here in the US and in the UK, around commercial spin-offs for universities. And part of the challenge is around the taxation and the rules and treatment of those spin-offs for foreign universities. And I wonder if, Minister, you had any comments on that and whether higher education...
You see, I won't make a final comment on that because that's a debate in the country which is currently on. And therefore, when it culminates, it's only at that stage that the concerned ministry, the Human Resource Department, will take a final view on this. And therefore, it would be inappropriate for me to express any opinion while they're still in the process of finalizing their stand on this subject.
Arun Gosai, Constellation Capital Management. One of the areas that was mentioned was fintech. It would be interesting if you can give us a sense of what sort of things that you're interested in, and to the extent that people have an interest in that area, what is the assistance that might be available?
You see, this is one area which is, in a country like India, with a large population, and the emphasis of the government on digital India and increasing use of digitization in governance itself, I think there's a large expanded activity which has been going on. And this is absolutely clear from the fact that Indians have traditionally taken well to technology. And in governance, currently, for instance, if you looked at the manner in which we conducted our financial inclusion program, almost providing over 1 billion people or 1.2 billion people with bank accounts, creating a UID on that or a different platform, giving to almost close to almost all adults, barring a few exceptions, the UID number, integrating their mobile telephones and their UID numbers with their bank accounts, transferring all their benefits to them. Now, this almost involves connecting every citizen on the strength of that technology itself. And therefore, I think as the use of this is going to expand for different purposes. So today, at the end of the day, what is the GST without the technology backup? What is, in fact, one of our departments where functioning lacked credibility, our direct taxes department, because people were very scared of the idea of dealing with them. It's technology which has now enabled a situation that 99% of the SSEs are only dealing with the department through technology and removing the physical interface, which has completely eliminated corruption, at least for those 99%. And I think with these kind of users in governance itself, scope for the fintech companies, the sky is the limit.
Follow up on that. So let's say that we wanted to build high-end services which would be based on that infrastructure that is there. What help could one get to tap into the infrastructure to then build high-end services on top of that?
I think as the activities continue to expand, there are a lot of service providers who are utilized by them. It's not the government machinery, it's the service providers who act as eventually the instruments for creating that infrastructure and for further used build of that.
But, as somebody who's not that close, if somebody wanted, is there any assistance with the basic infrastructure stack that one
Which is
could build higher-end services?
NIC.
You can come to FICCI, we'll help you.
The NIC, yes.
And besides FICCI, which is the right kind of interface, the Department of Telecom is doing a basic fiber optic framework for laying down a backbone in the entire country, connecting down to the last point. RBI has also issued a discussion paper on the fintech into the financial sector. So there are, we'll be happy to interact with you if you have specific
The security.
ideas. Yeah. For the securities, for
The security providers to the system.
Right.
From the Hindu. Thank you, Mr. Minister. From your meetings today with the administration officials, can you share anything more on the US administration's outlook on Indian economy?
Well, I think I think the US administration or the investors, I'll generalize it, have a very clear understanding of the kind of reforms as also the expansion of the economy itself. They also have a clear idea about the future potential. And therefore, I think I've always found in the last 4 days that I've been addressing investors, meeting investors, and dealing with their queries, I see a certain positive mood about India which continues to remain.
Could I request Dr. Baru to make some very brief closing remarks?
I'm not actually going to make closing remarks. I've just come here to thank the Finance Minister on behalf of FICCI since we put together this meeting this evening. Sir, I should mention that the first time I entered this building was on the 9th of December, 1990. And I discovered that both Dr. Rangarajan and Deepak Nair were here in the room of Mr. Gopi Arora, who was then the ED, the IMF, secretly trying to negotiate a loan with the IMF. We have come a long way from December 1990. Many of you have followed the India story, which is why you're here. But I think the important thing to recognize, I was just reading this morning in the Wall Street Journal about the China going back into public investment and state-led development because of the problems of debt and the problems in the private sector, that the India story is really about the private sector. It's about private sector-led growth. And you would have all noted what the finance minister said about fiscal prudence. The government is holding on to its fiscal targets. It's not getting into the economy to drive growth. It's in fact creating an environment for the private sector to drive growth, which is why FICCI is here. The reason FICCI tries to bring together investors and government is in order to facilitate increased private investment and interest on behalf of private sector. So for those of you who would like to follow up from this meeting, for any help, any facilitation, we have an organization which is both owned by the government and by FICCI as an investor called Invest India, which is an extremely useful entry point. But apart from that, my office, my colleagues here in Washington, D.C., we will be very happy to take a relationship forward. Thank you very much, sir, for spending this time with us.
Thank you.